Alright, Yaroslav, let me take all the issues one by one here. Let's discuss about the first issue as we had discussed in the email about the new trade validation and the way it should be taken. This is the live market and your script is already running on it. This is the first trade had been taken today and it has been perfect because the short trade setup had been identified based on this particular candle where the close of the candle is well below the moving average, more than 50%, a valid short setup, and we took it. It also got exited perfectly, no doubt here, no problems here. Okay, now check it out. After this trade the market reversed, and on this particular candle the close of this candle has been 1.2500. At that point in time the moving average, as we can see, is at 24956. So this is not a valid setup. Perfect. EA never took any trade. Perfect, no problem here. However, check out this next candle. The close of this candle is at 2510 and the moving average is still somewhere around 24967. Now this is actually a valid setup. We are not in any trade at this point in time. The previous short has already been stopped out, and at the close of this green candle we have got a perfect valid setup. So we should have gone long here, but EA is ignoring this setup because the EA is being programmed in a way that check for the close of a candle if and only if the moving average is moving through the candle body. However, that is something which is not expected. Wherever the moving average is, it doesn't matter. Only thing matters is the close of the candle should be more than 50% for the long setup, and the similar rule applies to the short setup. So idea is I was expecting say valid long here. So sorry for this line, it's not been drawn properly, but I hope you understood what I am saying here. Let me put in some arrow here. So yeah, on the close of this, on the opening of this particular candle, I was expecting a long setup, which is currently not happening. So this is the classic example by which I think it would get clear to you. There are lot many other examples like this. Okay, take this one. Or rather, yep, take this one here. Okay, now let's take an example of a short trade. So imagine that this is the beginning of our trading. The close of this particular candle is at 2510, the moving average at 2512. Definitely short does not get qualified, so we would not be taking a short. And the EA would now wait for the next valid setup, as per the current program. Does mean that we are going to miss this entire down move, which I am not willing to bear. So idea is, post this, at the close of this candle we should check the close of this candle is 2500, the moving average is at 2512. It does get qualified for the short trade, so the short should have been taken here, and the initial stop loss should be counted based on the basic rule. So if the previous candle is a bear candle, keep the stop loss at the open level of that particular candle. So I hope this is clear. So let's move now to next issue. In-sync flag not working, that was my complaint, and you said that you checked it and you want some more clarification on this. Let me tell you that Imagine this is a start of our trading. So the down arrow. So let me check what's the current GMT time. Alright, current GMT time is somewhere around 9:59:41, and let's assume that we are modifying this EA start time to say 10:02. We have placed the in-sync trade flag true. Now what is the expectation is the moment GMT time 10:02 is happening, based on where the market is, whether it is above the moving average or whether it is below the moving average, based on that the first trade should have been taken as it is. Does mean that at 10:02, if market is at the current price level, say 2511, and the moving average is at 2496, does mean that I should take long trade at that very current level. The stop should be again calculated based on the trading stop loss mechanism. Like at this point in time, when I am taking the first in-sync trade, my stop loss should be below the moving average level. So if the moving average is at 2496, my stop loss should be at 2489. Ideally 2490, but 2489. This is the expectation. I don't think it is still happening. So this is the expectation from in-sync. Now okay, take profit level parameter I had it. Nice. Missing, okay, this is the point where we are saying, I am saying missing key level adjustment. Okay, idea is in our EA we have got one parameter called as spread, the spread cost. I normally put it to 2.7. okay, you rightly explained that the trades are already getting executed at the ask level and not the bid level. So the spread is okay. I do accept that point. However, let me tell you that allow it to the individual to decide whether he wants to take the entry point based on spread or not. So if I am fine with whatever you are saying, then I would probably make spread 0. And if I make spread 0, I believe that it would take the default spread into consideration, whatever broker is charging, and that way the trades would be taken. But when I am saying 2.7, means if my long is getting qualified at say 2510, say at the close of this, then I would like to exactly get long at 25127 by adding spread 2.7 pips into that level. That's the expectation. So that is the spread adjustment. However, while deciding on the stop loss, what I need is we adjust the stop loss by 1 pip. So say for the long at 2510, our stop would have been ideally at the beginning of the previous bull candle, which was like 2490, but I would like to put the stop loss at 2489 because the key levels are important in the market, and it's sometimes quite easy for market to reach at 90 level, but it's very much difficult to breach that level and go even down if it is really willing to go up. So idea is, let's give some room to our trade. by making some key level adjustment at 2489. So that's the key level adjustment while taking a long. Now let's take the example of a short trade. Imagine at this candle we were already long. So say after this particular candle, here we got long at the close of this candle, which is 2490 plus the spread. So we got long at 24927. Our stop loss would have been at say 2469, 1.2469. Then it got little bit in favor with the moving average. Our stop loss is also moving. While being into the long trade at this point in time, when we are here on this particular candle, the moving average is at 2494. So our stop loss would have been at 2479. Fine. Getting to the next candle, now this becomes a valid short setup candle. So what would we do is, we would first adjust our stop loss from 2479 to moving average. At this point in time, at the close of this candle, the moving average is at 2496. So our stop loss would be at 2489. So first we would close our long trade by allowing the stop loss to hit, that is 1.2489, and this candle also becomes the valid entry point for the short setup. So we would like to take the short setup at 1.24888, exactly down by 1.2 pip. So while being long, we only adjust 1 pip in the stop. While being short, in the entry we adjust 1.2 pip. So the simple reason behind giving this 0.2 pip of space is because sometimes broker does not fill up both the trades simultaneously at the same level. To avoid that, we are just allowing 0.2 pip to be as a space for not allowing that kind of error to happen. So the short would have been at 1.24888 and the short setup at 1.24888 and the stop of that. Now stop should have the spread inside to be calculated. So the previous candle open was at 1.2510. We would add the spread, which is 2.7. So the stop loss, initial stop loss for this short setup will be at 1.2. It would be at 1.25127. That is what is expected. I hope this key level adjustment is also understood to you. Just to summarize it again in a very brief, while being on the long trade, we add spread to the entry and we do the 1 pip key level adjustment to the stop loss. And for the short trade, we do the key level adjustment to the entry of 1.2 pip and the stop is being calculated by adding spread into it. Simple. Hope it helps. Thank you so much.